Hello from Hong Kong and welcome to this week's market update. Santa came early as global markets continue to rise with positive news and headlines, driving bullish sentiment. Now, there are many reasons why this can continue for some time, but we would expect some profit taking before the end of the year. Pfizer has an issue with sourcing the raw materials for its vaccine with BioNTech, which will limit its rollout in 2020. Now, the UK will be the first market to receive the vaccine next week after regulators there approved it for use, with the United States to follow next week. The EU is mired in regulatory red tape and may not authorize its use for weeks. Sentiment seems unchanged though by the news, but if we see more meaningful delays or issues, this could cause markets to pause and take a breath. Congress in the United States passed a bill that could delist Chinese companies from US exchanges if they fail to comply with audit requirements. The bill on the surface seems concerning, but if you look at the detail, firms will only be delisted if they fail to comply for 3 years in a row. Investor sentiment on China seems undented, with foreign inflows into China hitting record levels, with $212 billion of overseas capital moving to the mainland this year. This is being led by banks and insurers, and one survey suggests that by 2026, investment banking profits alone could be up to $47 billion. And with most global asset managers looking to increase the weighting of China in their global funds, this should all be positive for China markets. The EU toughened its stance with some last-minute changes to what looked to be an agreement with the United Kingdom, as France threatened to veto any Brexit deal it doesn't like. Our opinion continues to be that this is all last-minute posturing and that a deal will be agreed prior to the end of the year. Now, the pound seems to reflect this opinion as it trades at 134 against the US dollar, 111 against the euro, and 1042 against the Hong Kong dollar. Finally, for this week, OPEC announced a gradual phasing out of output cuts, which supported oil prices and helped oil company stocks. Brent crude closed at its highest level in 9 months on the news that 500,000 more barrels of oil will be added to the market from January. This should start to feed increasing demand in Q1 as the vaccine is rolled out and the Northern Hemisphere winter takes hold. That's all for this week's market update. I will see you all again next week.